Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Actually, this is like public, isn't it? Is it? I think it is, isn't it? Oh yeah. So we're prime time, folks. Prime time. All right. Welcome back to the show. Actually, Happy New Year. First official day back in the saddle. I suppose in the extended version of this daily brief, we'll take a look at opening range trades. But what do you think, Chris? Can you feel that the pros are back in the saddle on the opening range trade?
Yeah, feels like they're back. Wasn't as bad of a trading day as I remember it being last week.
Yeah, last week was challenging. If anything, it's great to, we should have been on the slopes of the Mount Fuji like Julian, but I suppose we all can't live the life. But if anything, it was probably good to go through one of those sort of holiday session sort of trading environments, just so you can see. And now Chris can have said, firsthand that he witnessed how crappy the liquidity is through holiday sessions and how much of a waste of time it is. Anyway, but I can say felt good to see some pretty good movement in the markets right out of the gate. And of course, we are into the January barometer report window here for the market. So if anything, we have to take a kind of a step back through this first, really first hour, first day, first week, first month of the calendar year, and sort of observe what the higher ups are trying to tell us about the 2023 to come. So this is a pretty important window. The opening range trade that I made reference to there, very mechanical in nature. So it's sort of like, it's just if then else kind of thing. So, but it's good to see right out of the gate booking a nice winning trade to start off the statistics for 2003. Nothing like good omens there to set us in good stead. Welcome back to the frivolity. Welcome to 2023. Like I have to say, I'm super impressed with the website now. It's looking very crisp. We just needed to crisp up one little thing. And Stuart attacked it like a boss and was all over it. And feeling very optimistic for TRI's prospects going forward here, and the tools and information that we can provide for you. So super excited about that. Today is Tuesday. So of course, yesterday was a bit of a holiday, but being Tuesday, TRI's CTO, Chief Technology Officer, basically the genius behind what you see on the screen here, is on the call to tell us a little bit about what he's seeing on the site and site development, and what he's also seeing in the marketplace. And also, I think he's very knowledgeable within the cryptocurrency space. So what his observations there are super valuable. Stuart, do we have you on the call today?
Yes, I am here. Hi,
Hey,
guys.
everyone. All right. So once we've done the sort of market summary, we'll pop on over to Stuart's world and see what he has to say, and if there's anything in particular that he'd like us to pay attention to. Market summary. We'll want to do this about 30 minutes. With this being the first trading day of the new year, obviously, like I said, a lot of information that we're going to be given by the marketplace. And if anything, what we should be doing is just observing and watching. Having said that, I'm not going to be putting on any new position trades, that's for sure, but having a lot of fun doing things like opening range trading plans, those kind of things in the marketplace in the futures market. What I would say is, and of course, if that trade had just played out and I still had the position on, then I just manage it. But I did get stopped at scratch on my remaining crude short contract that I had this morning. So I'm on the sidelines now. Just overview kind of things that I want to keep an eye on. Watching how risk on versus risk off assets are going to behave here through this January period. I think it's going to be extremely important information for us to see what kind of year we got ahead of us. And it's interesting how you can see right out of the gate the risk off assets are clearly catching a bid. Risk on assets, not so much. Also, too, I like to look at the S&P 500 itself as sort of a proxy for what the market's thinking for the coming year. Notice we gapped higher right out of the gate. We had a huge surge right out of the gate, right out of the open. And then, of course, we pulled back, had another surge up to new highs. And then we've come back, and you can see, ironically enough, we're basically right where we started. So it's a big hurry up into nothing so far. This, if anything, is a perfect analogy of the Benner year. 23 is supposed to be our market bottom. And if anything, absolutely love the website in that you can come on and read our excellent research. And of course, we'll be adding more and more content as time goes by. But, we're going to be obviously watching things like January barometer messages. Last year's January barometer was pretty darn accurate. But, more importantly, I think for sort of like the swing kind of trader and position kind of investors, if anything, we want to be watching this 23 trough. And as I kind of showed you on Bitcoin, I do believe that it's going to be very similar to sort of the 2015 cycle, which means this is going to be a basing year. I don't think you're going to have a rip-roaring up year. I don't think you're going to have a rip-roaring down year. At the end of it, you're probably going to find that we're just about exactly where we started. But in between, there's going to be some volatility, folks. Get ready. So that's sort of your 60,000 foot view. And of course, I like to look at all of these markets all together. And just sort of, just what I'm really doing here is I'm just listening to the market's message right now. Clearly right out of the gate, US dollar's catching a bit of a bid. So people are going to be concerned, right? This is a risk off asset, but also too, this is a proxy on sort of growth. If you find, at the very end of this current greed cycle, we should see the US dollar extremely strong. And we're going through the process now of unwinding the European story, unwinding the Asian story, and capital's flowing back to North America. Watch the Peter Zahn videos and stuff for more on that. Bond market right out of the gate, we're not done with these interest rate increases. And I think that's one thing that I think a lot of people are not taking into account is it's interesting. We on this site, and of course, part of our education program, we teach you this concept called sector rotation. And, heading into the fourth quarter, we had a kind of an idea of where we were on the economic cycle based on money flows for the first couple of weeks of the quarter. It's a handy guide. It's something that we teach in our education programs on just sort of what to think out of the sort of talking. Well, no, not the talking heads, the actual people that spend money, the big fund managers. And interesting enough, this was the full quarter's data by the end of the year. And if anything, what's interesting about this is I think the fund managers thought we were a little further along the curve. But in reality, money's still flowing into materials, industrials, energy, i.e. we're still up here. And if you actually look at what's the criteria that should happen around, the very top market top, is actually what we should see is higher interest rates, more interest rate increases. So I don't know whether the public's really ready for that we're not done with the interest rate increases. We just had a little bit of a reprieve because of the seasonal nature of the markets around the fall transitioning into the winter, but we'll see. Stock markets, like I said, January barometer, as January goes, so goes the year. We're not starting off so good on risk assets, folks. I would expect through the month of January for this to firm up, and hopefully through the rest of the day, we do see the market catch a bit of a bid. Interesting too, we had a big spike in the gold market right out of the gate, but then we had a major rolling over, which is a little bit of a surprise to me, to be honest with you. But this also kind of portends that if the Fed is actually going to keep raising interest rates, we might find that there's a nasty sort of deflationary shock later on in the year, which would be sort of corresponding with the stock market coming off. Then, you might find that halfway through the month of January, we start firming back up, and, through the end of the year, a bottom comes in. Remember, it's going to look something crazy like this. We had the big spike out of the open, then a pullback. Do we get big rallies? Pullbacks? I don't know. It's tough to say, but one thing is definitely certain. There's going to be a lot of volatility here. I won't go through the rest of the markets. So it's supposed to be a half-hour summary, but you get the idea of what I'm looking at here in the market just out of the get-go. I'd also say too, pretty valuable. Let's listen to the sort of market breadth and what the market is trying to tell us. It's actually set itself up for a bit of a rally to start the year. And keep in mind that we are generally want to be optimistic. So it doesn't surprise me. Into the end of the year, you get a whole bunch of tax loss selling, which pushes a lot of assets down. Then you sort of get into the window. Maybe there's some good sales for the Christmas season, Boxing Day, all that kind of stuff. And then the market catches a bit of a bid because the tax loss selling ends and people are wondering whether Christmas sales were half decent. So we're in that sort of, we got a little bit of inertia behind us. Let's see if it has any traction. As we said, the irony of the S&P right now is that this is basically right now, and notice like we're trying to recapture that unchanged level, and we even put in a little W here. Let's see whether we can rally, but man, this is going to be volatile. So point of the matter here is that the indicators themselves are pointing relatively uppy. I'm not going to say it's a huge bull market. Our slow, our teal is still sloping down, which means that any kind of buy signal you have here is a weak buy signal. If this can start turning back up and we make more structural signals heading higher, then hey, maybe we got something to work with here. Generally speaking across the board, you can see that message. This is all the Dow stocks. Even the bonds have started to clean themselves up. They haven't turned yet. Like I said, with interest rates, that's still a bit iffy. Looking at the global market, you can see the commodity countries themselves are trying to tick back up here. You can see North America, the big industrial names there, trying to tick back up. Europe, of course, with what's going on in Europe, this makes sense. It's kind of sketchy right now. It's not really overly happy. Yes, it is washed out, and it's trying to base. And actually, we'll have Stuart on the call here in a few minutes, and he might just tell us a little bit. They're dealing with the crazy natural gas prices over there, so it's understandable why the economy is pretty weak there anyway. Then that finally brings us to crypto. And ironically enough, crypto's actually got a half decent bid working. It's just the only problem is that if the whole broader market is in sort of a risk off kind of frame of mind, it probably drags down the crypto market with it. But I've often thought of crypto as an interesting leading indicator. So, it did lead, like all of these markets are begrudgingly being pulled up here. So it did lead there about a month or so ago, just a little less than a month bottoming. The only problem is the rally just hasn't really been that substantial, eh? And if anything, when I look at the crypto, what I see is, of course, this is like I said, it's great to see the team sort of got this all nice and reporting nice and cleanly now. It's interesting to see who, like sixes on this are like, whoa, you know what? If you're going to invest, that's probably a market to pay attention to. It's at the bottom end of its range, and the moving averages are starting to turn back up. Now, these are getting a little bit old, so we want to start seeing some higher highs and higher lows. If we don't see higher highs and higher lows, you might see that this starts to wane and where they go back to fives because the moving averages cross back bearish again. So, but the point here is who's leading? Obviously it's Mr. Musk and his whole Twitter thing. That's still a very much a topic of conversation in our society. And I think Litecoin, to a certain degree, is part of that conversation. And also, too, Litecoin does have a halvening event coming up this summer. So, 6 months ahead of that halvening event, it does make sense that it's catching a bid. And then we've got a whole bunch of names in the crypto space that are just sort of waiting for permission to actually go back bull. They're not bull yet. And they're just, it's like we're right on well, this stuff could turn, but sometimes it takes a few cranks of the engine to actually get it to turn back up. And Bitcoin, I think, is a perfect example where here we are down at the bottom end of the range. The indicators are trying to turn, but you can see moving averages are still pointing bearishly, and we've been bearish for quite a while. And this is not going to be a new bull market until this thing actually does bottom out and start to turn back up in earnest. And given what we're seeing, especially with the way stocks are acting here right out of the gate, if they're still waffly, I don't see why Bitcoin would turn back up. And then, of course, you have the albatross of, SBF hanging over this market. Is there still one more shoe that has to drop? Him getting formally charged and going through the whole trial process and all that. That's going to be an ugly thing. And, if anything, we're kind of thinking that Bitcoin and crypto should bottom through this 23, but it's going to be messy. So that's sort of the backdrop of the market right now. We're close. And if anything, what I like is prices are cheap again. Brian, he's a cheap ass. So prices are cheap, but we're not turned back up in earnest just yet. So, as for econs, probably the econs actually kind of reflect this, and it's sort of why you've seen the stock market kind of floundering here. Econs coming out today, headlines are German inflation rate slows more than forecast. So that's good. Like I said, Fed cranking interest rates up. They Chair Powell specifically said, I'm going to bring pain to your lives. And that's exactly what he's doing. So the good part about this, of course, is that if you cut the demand for commodities, prices in themselves will fall. The question you have to ask yourself is how much of this is a function of the fact that Vladi and his excursion, we'll call it, has gone horribly wrong. And at some point, he might actually have to try and think about, okay, I got to unwind all this. Tough to say. The point here is, and actually, like I said, Stuart coming on the call here after I'm done ranting here for you on our little update video, he'll probably give us a pretty good idea of what the situation on the ground in the Netherlands is like. You can see markets not overly happy. I mean, we're not rip roaring here. In fact, actually, that probably should be. Oh, that's interesting. It usually is dynamic. I'm not quite sure why that's not updating on its own. Anyway, so why are we kind of soft like econ wise? And we had purchasing manager index numbers come out today, and they're like, blah. I mean, not really exciting. So PMI 46.2. And the rule is that if this number is below 50, then it's a sign of economic contraction. So there is your anecdotal evidence that the Fed is engineering some pain in your life. Probably, the world economy, and of course, you see what's going on in China right now. It's challenging. You might even argue that the Fed wants to try and break the economy. That's usually how these interest rate increases go. If they were worried about inflation, then they want to just keep, pressing the gas or the brakes, press the brakes until something does break. In this case, it was, sickness and global economy shutting down. And at that point they're like, okay, well, we definitely know there's deflation now, so we don't have to worry about inflation being running away. And they come in and crank interest rates back down, and all of a sudden the market and the economy takes off again. So my hunch is this is probably just going to keep heading this way until they actually have something break in earnest. My hunch is that it's the European economies that break. And the Asian economies, I mean, this Chinese situation is, it's almost beyond comment right now. It's just such a cluster, you know what? But anyway, only time will tell. Econs wise, the big data points coming out of North America today, PMIs, and then, yeah, interestingly enough, you can see Canadian actually manufacturing is even a little bit better than the US, but nonetheless, kind of going sideways now. We've kind of just sort of flatlined to a certain degree. Probably also another commentary there. Construction spending actually was expected to tick down more than it did here. And, you know, we might even have some the form of a W. And if that's the case, then the Fed's going to be like, hey, I told you to calm down. Why are you Wing out? If anything, you don't want to see something like this take off again. That's a bad sign for sort of the end of the interest rate increases. And I think I had sort of said to you a moment ago that I actually think that there are more interest rate increases ahead for us, but that's just Brian's opinion. Rest of the day, we got a couple of T-bill auctions coming up here. Actually, they've already happened. Then you'll notice we jump all the way out to some Asian data later on this afternoon. So to all intents and purposes, that's basically it for the data today that's going to drive price action in the market. Really, I would just simply say this is now a case. Well, look at that. We've broken back to the downside here. You know, you don't know how 2023 is going to finish. What I would just simply say is through the month of January, let's watch how this acts and how this behaves to give us an idea of what to expect for this coming year. As well, too, and I haven't done it yet, but we should probably start working on things like decennial reports. I thought that was an excellent report that we used last year to try and help us get an idea of what to expect. You know, thank heavens we're finally in the 23-year Benner cycle, all that kind of talk, buy your corner lots. But I don't think there's a hurry right out of the gate. I think, you know, you can give it a bit of time. Let's see. Anything else that I'm supposed to talk about here in this 30-minute summary, Chris?
It is Bitcoin's birthday today, and proof.
That's right. Bitcoin tastes great. Unfortunately, you know, as I was showing you earlier, I think this isn't really going to be a commentary about Bitcoin as it is more a commentary about risk on and risk off. I mean, the interesting thing is you should all look at this chart right now, right? If I line up the 630 open, you should all look at this chart and go, holy crap, I can't believe how Bitcoin is so highly correlated with the stock market. And this is the S&P 500. My hunch is that this is probably even more correlated with the NASDAQ. Now, having said that, poor old Bitcoin, getting sort of drawn down with the rest of the trash. This is a half-hour chart. If anything, what we'd love to see develop over the next maybe couple of days is this turns into some sort of bullish bot. So we're at 33%. We filled in this gap from the weekend. If anything, what we'd like to see is just can we get, you know, a nice sideways consolidation here, just to frame some sort of bullish move to the upside. You know, Brian, he likes to have 3 higher lows. And probably if I go something like there to there, and then I go 25, I get pretty good at this. So let's see how close I am. Boom, boom. Oh, close. Not bad. Yeah, maybe a little bit aggressive. Anyway, so something along those lines, that would make Brian very happy. And then that would actually set up a really nice trade down the road. So nothing really to be done today. If anything, A, B, C, D, I'd actually be looking for a continuation pattern. So if we go, you can kind of see it here. And if, you know, if we're going to have a really volatile beginning of the new year, then that would make sense. So something like there to there, and then there to there. So we did 33%. Let's flip that around. And we'll go there to there. So then that starts giving you those A, B, C, D downside targets. So if you're a day trader or something, I might pay attention to, let's flip that around. Something like that. So sloppy price action, just horrible. I don't like that price action at all. Probably wouldn't be a trade that I'll do. If anything, I'm probably just going to puke right out here into those levels. So let's watch over the next week how we do here. Ideally, what I'd like to see through the month of January is, can I please get just some sort of big fat nice saucer bottom? Having said that, if anything, this is a fantastic time to be thinking about not your keys, not your coins. So do you really have to keep your assets on a centralized exchange? Caitlin Long, that video I have a lot of people I've suggested watch. She's like, take the opportunity now to introduce yourself to cold storage wallets, introduce yourself to private keys, and maybe take the time, introduce yourself to Ledger, and take personal ownership of these assets yourself. I did watch a really cool video on Chico Crypto the other day, talking about how he wants to get everybody 32 Ethereums, at least encourage everybody to get 32 Ethereums. And he even had this really cool little piece of hardware that he was, I don't know whether he was shilling or touting. I don't know whether he gets a cut on the sales or not. But I'll tell you, I'm very, very interested in doing something like that through this first quarter. So, right out of the gate, I think we're going through a bit of a consolidation period, considering, 22, what it looked like, 23 starting off, it's going to be pretty choppy. As I said, broader market, insanely volatile. So just be careful here through the beginning of the year. Ironically enough, I actually think probably around the end of the year, we're going to be probably a little bit higher than where we are right now. But on balance, if we were around the same price by the end of the year, that wouldn't surprise me one bit. So there's kind of thoughts on Bitcoin. In fact, I'll even keep this chart on the screen. We'll watch how this develops over the next few days with these public broadcasts, and how it plays out through the January barometer reading report. So, all right, that is basically about a half an hour. I don't know. Is there anything else I missed, Chris, that we should talk about?
I don't believe so, but we do want to remind everybody about the raffle that's coming up this weekend, as well as a new school term.
Excellent. Well said. I've been putting out tweets and stuff, just asking you, do you have your together? This is our level 1 program. This is sort of like the default sort of page that I send people to. We do have, if I'm not mistaken, like I said, oops, that's not what I wanted. We do have, do you have the link handy? Maybe we should throw the link into the YouTube page there. Oh, it's join. That's right. Yeah, that's what I forgot. So join and join dot like that. Yeah. Whoops. www. How many W's do we need in here? Oh no, what have I done? Oh, now I'm wasting time. Hey, there we go. Course. Oh yeah, Core. Okay, so I've been showing people this page on, and this is the link that's in the video. So if you're interested, we do have a new school term coming up here. We do the intake one, I guess, on a trimester system. So next intake will be in the spring. So if you want to get your together per Brian's rants on social media. In fact, I think I even have that chart. That's this chart. We are in this window now. I mean, seriously, folks, if you are serious about this, seriously, you got to have your together. You got to have your plan together. You got to have all the setups, all the vetting of why you're doing this. What is the criteria that's going to get you to act? I don't care whether it's investing, swing trading, day trading. It's the exact same process for everybody, but you just got to have your act together. And you got to play from a position of strength. So take the time now while we're in this window before we start going ape poop and people start losing their brains about, 100 X's. It's coming, but you got to get your stuff together. So, one good way to get your stuff together, we teach you basically how to build a small business of trading. We've got a new school term coming up, and I think, the schools, go to the page, read the reviews. But also, too, we have a raffle. And, we've actually changed a lot of people's lives that have just simply won the raffle. I often tell you, David O, a gentleman on the site I'm immensely proud of, he was actually our first raffle winner, and he's still on the site, but 7 years later, trading like a boss. And that's exactly what I wanted to see. So pop on this page, throw your name on the raffle list, and I might be able to change your life for free. I think that the price that we charge for this education program is very reasonable. And on a weekly basis, it's like 150 bucks a week, which frankly speaking for a school program these days is peanuts. So if you don't win the raffle, I would still seriously give this consideration. Let me help you change your life. And I think I can, but you got to let me help you. So, all right. Why don't we leave it at that? Have yourselves a fantastic rest of your day. Stuart, you ready to rock this thing on the other side of this free video?
Yes.
All right. So have yourselves a great day. PMA for the win. We'll see everybody on the public video tomorrow. Maybe pop on the site, consider joining us, and we'll listen to what Stuart has to say about life in the Netherlands right now. Ooh, interesting. Yeah. All right, everybody. All the best, and bye for now.
Woo!